I guess they call it like the big three, right? We're going to be, if you're a real estate investor and you buy a property, let's say for, I don't know, $3 million. It's a multifamily apartment and you close on the property. Instead of just 40% of the cost, being able to write that off up front, we are going to now be able to expense 100% of that qualified property up front for the next 5 years. Jay, go ahead and jump in.
Jay, explain what that means.
Yeah, so essentially, you can do this on single family properties as well, but this is a huge deal, and it's a huge advantage, from a tax perspective. But the 100% bonus depreciation means you can do a cost segregation on that property where they look at the use of life of everything from windows to concrete to every aspect of the building, and you can write this bonus depreciation off 100% of it in the first year. And so that might mean, let's say you put 100,000 into an investment, into a syndication or an apartment deal. You might be able to write off 70 to 80% of that investment the first year. So you get a negative K1 against your taxes. It makes investing in real estate, specifically in apartments, and there's other, segments as well. There's, different buildings have different advantages in terms of this, but apartments, because there's appliances, there's all these things that add up, it's a huge deal. So it was 40% before, now it's back to 100%. And so that's a tremendous opportunity for tax deductions for people that have money to invest in real estate. So it's certainly, me not living in Puerto Rico, paying 4% tax now is going to be one of my main strategies.
Yeah.
And then Section 179, deduction increased as well to 2.5 million. So for buying business equipment, vehicles, and things of that nature. So that's another big one. And there are, for those that are looking for strategies, you can invest. You could buy $1 million worth of equipment. There's companies that you can make an investment and then they lease that stuff out for you. So let's say you put down 100,000 on 10% down on $1 million worth of equipment. They spread that out amongst different industries, different types of equipment, and then they lease them for you. So they're cash flowing, and you get $1 million deduction from the total amount that you borrowed against. And then they guarantee to buy that equipment back at a pre-agreed price, I believe, in year 5. So like there's a lot of ways to defer tax, if you will, that without these, we're just paying a ton of taxes.
Yeah. Go ahead, Al.
Said deferring tax. You're not avoiding taxes, it's deferring taxes.
Right.
Because that is a big thing, and we're not tax advisors. So talk to your CPA with specific questions.
Well, let me. I was talking to a friend that stopped by the house here yesterday that got hit with $125,000 in additional taxes. Not a real estate guy, just a normal guy, has a bonus structure. He got paid, hit a bunch of bonuses for the company he works at, and his tax accountant, who he paid $1,000 to do his taxes, said, "Oh, I'm sorry, you owe $125,000 more than we thought you owed." And I want to stress, like, you need a tax strategist, okay? Mm-hmm. Not just a tax accountant. You need a tax strategist. A tax accountant is just going to count the beans. You need a strategist that gives you strategies for deductions. And that's, I think, for most of my life, I didn't know there was a difference. And so definitely, look for someone that understands tax strategy and, work with them and an accountant to do your taxes.
There's two things. I was talking to Kurt Shewell before we jumped on the podcast here, and Al and I sat at the Build in Detroit last year, and Mark Z gave, I think, probably one of the most important and probably one of the best presentations for real estate agents to ever hear in their entire career. And they're about to launch Mark's $100 million portfolio program, to where he went from 7 million of worth to 100 million. And he broke it down in the presentation. Anyways, they have a whole investment program that they're about to launch on that, and how critical that is to have, the right rooms, the right advice. And then Kurt was also telling me something. It goes back to the point here of the most critical information other than customer acquisition and leadership, but understanding the investment, but also understanding the tax game. Because he was telling me one of Kyle Whistle's best presentations is around the tax strategy. And Kurt took exactly what Kyle's talking about and pressure tested against his gal And she goes, oh, yeah. This is 100%, 100%. Yeah, you don't need this. Oh, yep. Oh, and you have this, this, and this. And he goes, he goes, good, you're staying, right? Because that's exactly to your point. You got to have a game changer that's a strategist that is helping you strategize the moves and taking advantage of everything that's available in the game. And so, you guys listening in, I mean, tap in, man, tune in, find, we've got Caleb's on here. I mean, he's well-versed being able to tap in. I mean, you guys as well, Kyle Whistle, Mark Z, Kurt Shewell. So there's a lot of people, within this community, within the Honey Badger Nation that we can tap into to really make sure. I mean, there's no excuse, right? There's no excuse. There's all the resources. Goes back to what we talked about and what Chuck said, man. It's all about community. And that's really what the Honey Badger Nation and One Big Fire is all about.